Well, I think we've reached a nice point, but when Bitcoin passed $100,000 to $200,000, maybe it'll trade from 250,000 down to 175,000, and people are going to be screaming the end again. Bitcoin is compounding at 40 to 50% annualized growth rate for the past 3.25 years since MicroStrategy got into the space.
A couple of days ago, Michael Saylor, the CEO of MicroStrategy, was on Bloomberg Television to talk a bit about their Bitcoin holdings and their Bitcoin strategy. Let's take a listen to see what the interview has to say, and I'll add a little bit of commentary along the way.
A verdict in the Sam Bankman-Fried FTX case, being found guilty on 7 counts of fraud. We'd love to hear your reaction to that ruling and what it potentially means for the crypto industry going forward.
I think it's an important milestone in the growth and the maturation of the industry. The crypto industry has been plagued by inexperienced entrepreneurs like Sam, unreliable custodians like FTX, incompetent creditors, a dozen went bankrupt in the last year or two, unscrupulous promoters. And their failure is a necessary rite of passage for an industry that's going to lead to a new, more stable, more scalable ecosystem that'll be based on Bitcoin. Public companies like Block, MicroStrategy, Marathon, a dozen Bitcoin miners that are public, institutional money managers like Fidelity and BlackRock, and regulated banks when they eventually become custodians. The offshore crypto exchanges, the stable coins, the crypto tokens, the DeFi projects, they're going to shrink, fade into the background, and decouple from mainstream and institutional digital assets marketplace that'll be based on Bitcoin.
And Michael, you bring up BlackRock.
I've got to say, I also think it's a good thing Sam Bankman-Fried and FTX had its eventual conclusion as it had. The deeper you dive into the FTX debacle, the more and more rife with compliance issues, regulation issues, moral, ethical issues. The whole thing was bound to come crashing down at some point. Glad that is all behind us as crypto holders. Moving forward here, I do think some of these companies that got caught with their hands in the cookie jar, so to speak, it is good that they went out because it creates more incentive for another company to come in to provide a better product, a better service for the end consumer. So just as capitalism and the free market will work its way through, the next generation of these crypto trading companies should provide a much better, sounder strategy for people to get onto and into cryptocurrencies.
You bring up Fidelity, and of course, both of those firms have applications in for a spot U.S. Bitcoin ETF, something that hasn't been approved yet, but there's a lot of speculation, a lot of optimism that it could be soon. What would that mean for MicroStrategy, given that, I mean, you've been on the record too saying that MicroStrategy shares are a proxy for Bitcoin. If you're able to get that through a physically backed ETF, would that lessen the premium that MicroStrategy enjoys?
I think it's...
Now, it's a good question because in a way, the ETFs that could or should be approved through the SEC could compete against MicroStrategy, because what Michael Saylor is trying to do here is be a proxy or a holding company for Bitcoin. However, I think as the ETFs start to roll out, the asset value should go up because there's a limited supply of the Bitcoin that's out there. If there's more demand, supply and demand would tell us that the price would go up. But I don't think that the Bitcoin ETFs would necessarily take money away from MicroStrategy. They're not charging a typical ETF charge or a mutual fund charge. And they are a bit more flexible when it comes to their buying and selling strategy than, let's say, a regulated fund might be. Let's see what Michael Saylor has to say.
It's critical for there to be a spot ETF for mainstream retail investors and mainstream institutional investors to participate. So it's going to lay a base layer that's going to allow large amounts of capital to flow into the industry.
True.
MicroStrategy is a special investment vehicle for Bitcoin long bulls. We're different from an ETF because we don't charge a fee. We can use intelligent leverage. We borrowed $2.2 billion at 1.6% interest to buy Bitcoin. And we can generate a tax-deferred Bitcoin premium either by using cash purchases or by capital markets activity. So we're not for everybody, and in sovereign wealth funds that want to buy $50 billion worth of Bitcoin can't fit into the MicroStrategy capital structure. But if you want leverage and this tax-deferred yield and no fee, then we're an interesting alternative for people in the space.
With regards, though, to building up that position, that crypto position even further than what you have, does the introduction of those ETFs, would that create competition to increase asset sizes, excuse me?
I think it's going to help everybody in the space. They're going to accelerate education efforts and adoption. Already you can see Fidelity analysts are making a huge impact on the digital asset space. So as you see...
I think that's true. I think some of the top companies that are out there that should push crypto adoption through these ETFs are going to be Fidelity and BlackRock. They're some of the largest players in the industry. If they start offering a Bitcoin ETF, and they start pushing it out into some of their portfolios, I see an immense amount of money coming into the Bitcoin space and through proxy or through a bleed over the rest of the cryptocurrency conversation. I'd say these ETFs not only are going to promote mass adoption of Bitcoin over the next 6 years, I would say, but I also think the conversation around general cryptocurrencies, or the other top 10, let's say, will also start to become into the mainstream conversation as well. So I think the spot Bitcoin ETFs are good for Bitcoin, good for long-term holders, good for Austrian economic thought leaders, but it also opens up the conversation to all things crypto, all things blockchain, and eventual, I think, Web 0.3 as well.
Wall Street analysts from all these ETF firms, and you see their education and marketing efforts come into the space. And as they provide the rails for traditional institutional investors and endowments and the like to engage, they're going to expand the entire ecosystem. But they're not an operating company. They can't take on leverage. They can't not charge a fee. I mean, we literally don't charge a fee. And they can't engage in cash purchases with operating income like we can in order to generate that tax-deferred Bitcoin premium.
True.
It's interesting, too, to see some of the moves in Bitcoin this year. Obviously, the volatility is still there, but not necessarily to the extremes that we saw in prior years. And I'm wondering if the introduction or the broadening out of the user base will reintroduce that volatility, or have we kind of moved past that? Are we kind of in a different era now?
Great thought. I think there's two potential ideas out there. I think if spot Bitcoin ETFs, if they're all laid out at once, all approved with limited regulations when it comes to how much you can put into them, I would imagine that there is a significant skyrocketing effect through Bitcoin price. However, if there's some sort of limitations to the on-ramp for whatever reason, where you can't put X amount of money in, or you can only buy and sell at a certain amount of times, if it's not a 24/7, 365 trading like original Bitcoin is, then I do think that the pressure through the demand for these ETFs, instead of having an initial skyrocket pump, I think you can see a consistent increase over the next couple of years, because it's a delayed effect for how much demand is going to be pushing into these ETFs. So it's either a huge pump up here in the first few months, or it's going to be a gradual adoption over time. And I think the over time would be a consistent upswing to the price versus these volatile times, ups and downs, if everybody gets in, everybody gets out, etc.
Well, I think we've reached a nice point, but when Bitcoin past $100,000 to $200,000, maybe it'll trade from $250,000 down to $175,000, and people are going to be screaming the end again. Bitcoin is compounding at 40 to 50% annualized growth rate for the past 3.25 years since MicroStrategy got into the space, with a lot of volatility. I think an analyst, Timmer from Fidelity, pointed out it is got the highest volatility of any asset, but it's also got the greatest return. And so, as I've said in the past, volatility is vitality. I'd rather have the volatility and the performance than get rid of the volatility. Gold's not volatile, but it's also down 1% in 3.25 years. So that's not what we're looking for.
Well, Michael, I want to talk.
This shows that the MicroStrategy stock, since purchasing Bitcoin initially in 2020, the stock in 3 years is up 267%. Is that just because of the Bitcoin holding? Is it just because of the cash flow the company has? But that's some interesting numbers there for sure.
Talk a little bit more about the user base of crypto. Who's actually buying? Because, of course, if you take a look at the trading market, you've seen trading volume absolutely fall off a cliff. And the narrative I keep hearing is that you've had all these retail players flushed out after what we saw with FTX a year ago. So maybe a spot Bitcoin ETF is in the offing, but do you think that that would actually bring back in those marginal buyers, those retail players, or have they been burned too badly?
The United States is the largest, citizens or companies in the United States are the largest purchasers and holders of Bitcoin. However, some of the overlooked sections of the world tend to be less developed countries, third world countries, who need to have some sort of stability in their currency. If you look at some countries such as Argentina and Turkey and Lebanon, who have massive inflation for the year, the citizens of those countries are looking for places where they can have some form of stability in their currency or in their purchasing power. And so more often than not, people in these places are starting to look for cryptocurrency on-ramps, whether it's Bitcoin or another altcoin, or it's some sort of a stable coin just to keep and protect the stability of their money. I think that's an overlooked area of underdeveloped markets and places that may not have some of these first world institutions to put a lot of money into. And I do think Michael Saylor in another interview will discuss the importance of the United States to buy and hold Bitcoin for the benefit of other people in these developing countries to help them kind of come out of their poverty that they may be experiencing.
Yeah, I think that during this crypto meltdown, the crypto bros offshore and the leveraged hedge funds, they exited the space. They were all bankrupted for the most part. Right now, the natural buyers in the space are Bitcoin hodlers, the maximalists, the people that are sweeping their incremental cash flows into Bitcoin. It's almost impossible, very difficult for mainstream investors and mainstream retail to buy Bitcoin because there are just very few on-ramps. So the natural sellers are the miners, the natural buyers are the hodlers. The trading volume has diminished quite a bit. This is the lull before the storm. Once we get these ETFs in place, that will open up the gateway for mainstream retail and mainstream institutional capital to flow. And the halving in April is going to cut the available supply in half, and it's going to eliminate half of the natural selling. So this next 4-month period is very pivotal to the asset class.
Completely agree. I think the Bitcoin halving is a big event in the Bitcoin space. The spot Bitcoin ETFs should also be a significant marker in the Bitcoin space, as well as the change when it comes to the accounting practices when it comes to holding Bitcoin on your balance sheet. Those three events are all coming together in the next 6 months to 12 months. I think those should significantly add to the argument of why people need to look at hard assets as a part of their portfolio. Of course, this is not any recommendations to buy or sell anything else. Strictly information and educational purposes only. That'll wrap up the video here for today. Thank you so much for checking out the channel. As always, if you like what you see, make sure to like button below. That is the currency of the YouTubes these days. Subscribe if you want to see more content that we put out. Stay inquisitive, stay informed, and stay subscribed for more. We will see you tomorrow.